Welcome to AI World TV, your go-to destination for everything artificial intelligence. Discover the captivating landscape of AI, where advanced technology finds real-life application. Subscribe to AI World TV for webzine articles, reports, podcasts, videos, live events, and latest trends. Hear from top industry leaders and discover how AI is transforming industries and our daily lives.
Okay, so if you follow any financial news lately, you cannot escape this one word: bubble.
It's everywhere.
Everywhere. AI, quantum computing, biotech, you name it. Pundits are lining up, basically warning that valuations are just completely off the rails.
Look, it's an understandable reaction, right? We've seen this movie before. But the key thing we need to unpack in this deep dive, I think, is whether we're really looking at a classic fragile stock bubble.
Or something else?
Or is it something, well, bigger, more fundamental? A sector surge driven by some kind of huge structural change, a real transformation.
Right, and that's our mission today. We've gone through a ton of market analysis, and the goal is to give you the tools, really, to tell the difference, to separate the speculation from maybe sustainable long-term growth.
Because they can look really similar on the surface. Fast growth, soaring prices, lots of buzz.
Exactly, but underneath, potentially very different stories. So let's start with definitions. What exactly is a stock bubble?
So a classic stock bubble, it tends to be quite focused, often around just a single company or maybe a very small group of them.
Okay.
And the main characteristic is that the valuation, the price, it just completely detaches from, the fundamentals, the actual business performance.
Money's just chasing the hype, not the results.
Precisely. The story takes over everything. It's built on this belief in, perfection, endless growth, total market dominance forever.
We saw that play out so clearly in the dot-com crash, remember? Companies with basically a website and a dream, as they said.
Yeah, valued like they were General Motors or something.
And that capital just chases pure speculation. Then reality bites and the whole thing collapses, often very quickly.
Exactly. The analysis we looked at calls it a distortion driven by emotion. It's like a belief in a company's future that outpaces its actual trajectory. It's fragile. It's speculative.
Okay, so that's the bubble. Isolated hype, detached from reality.
Yeah.
How does a sector surge contrast with that? Why does it feel, I guess, more solid?
Well, a sector surge is much broader. It's more of a collective movement, right? It happens when a whole industry starts growing really fast because of some genuine, paradigm-shifting innovation.
So it's not about one hero stock.
Not primarily. It's about a shared vision, maybe, for where technology or business is heading.
And we've seen this before, too, right? Like the semiconductor industry taking off in the 80s.
Perfect example. Or the build-out of the internet in the 90s. Those weren't just brief manias. They were fundamental shifts in the economy.
Building blocks for the future.
Right. And that changes how money flows. In a surge, you see capital being deployed across the board. Startups, sure, but also public companies, infrastructure providers, university research, even government initiatives.
Everyone's kind of building it together.
Yeah, they're all building towards this shared potential. The analysis frames it as being backed by long-term conviction and real technological momentum.
Okay, that distinction makes sense. But let's talk about momentum, because that's where it gets tricky for people, right? Prices are shooting up either way.
Yeah.
How do you know if it's just FOMO, fear of missing out, or actual substance?
That's such a critical point. It comes down to what's fueling the enthusiasm.
Okay.
In a bubble, the momentum is kind of self-referential. People buy because the price went up. That makes the price go up more, so the next person buys.
A feedback loop.
Exactly. The sources call it hollow euphoria, because not much genuinely new value is being created underneath all that price action. It's just money chasing higher prices.
So the belief isn't really tied to tangible results. It's tied to the rising chart.
You got it. Now, contrast that with surge momentum. Here, the momentum is driven by innovation itself. We call it productive conviction.
Productive conviction.
Because each breakthrough, each new capability or product that actually works, it validates the underlying belief. It proves something truly transformative is happening.
So you're not just betting on the future. You're seeing progress right now, like an AI model suddenly getting way more powerful.
Exactly. That kind of tangible progress validates the investment. And that validation fuels the next round of innovation and investment. It's a positive cycle built on real advances, not just hope.
That's a really helpful framework. Bubble is hollow euphoria, surge is productive conviction. But big question is, how do we apply this now? in today's market? How do we avoid getting swept up in hype and actually measure the change?
Right, we need practical signals, ways to diagnose what's really going on.
And this is where it gets really interesting. The analysis points to 4 key signposts, basically diagnostic tools, that tend to show up when a whole sector is genuinely shifting.
Yeah, and they force you to look way beyond just one company's stock price.
Okay, signal number 1.
Cross-sector investment. Where is the big money actually going? Look past the tech company balance sheets for a second. Is serious capital from venture capital, from huge corporate R&D budgets, even governments pouring into the physical infrastructure needed for this shift?
Like, are they building the actual digital roads and power plants?
Exactly. If billions are being spent on the foundations, that's a strong sign that they expect real traffic, real activity to follow.
Got it. Okay, signal number 2.
Talent migration. This might be one of the best long-term indicators, actually.
Who's working on this stuff?
Yeah. Are the really skilled people, top researchers, engineers, PhDs, are they shifting their careers into this new space, leaving secure jobs in established fields to join, say, AI labs or startups?
When the smartest minds vote with their feet, basically.
That's it. It signals deep, long-term belief in the opportunity, not just a quick trend.
Makes sense. Third signal.
Revenue acceleration. This is where the rubber meets the road, financially speaking.
Show me the money.
Pretty much. Are the new products, the new services, the new business models enabled by this innovation actually starting to generate measurable returns? You need proof that...
You are listening to the AI World Podcast, your trusted source for the latest innovations, insights, and trends in artificial intelligence, blockchain, fintech, and decentralized technologies. Each episode features expert interviews, engaging discussions, and in-depth analysis of how AI transforms industries worldwide. Stay ahead of the curve with the latest articles and exclusive reports from the AI World Journal, covering everything from emerging technologies to industry breakthroughs. For more news, global events, and access to AI World Society circle gatherings, visit us at aiworld.tv. Don't forget to subscribe to stay informed, stay connected, and be part of the AI revolution with AI World Lounge. Thank you for listening.
That real customers are paying for this change. It can't just be potential forever.
Okay, measurable returns. And the last one, number 4.
The global adoption curve. How widespread is this thing becoming?
Not just in Silicon Valley.
Right. Our actual customers, big established industries, think healthcare, finance, manufacturing, and even entire countries starting to integrate this innovation into how they operate.
If it's going global and crossing industries, it's probably more than just a bubble.
That's the idea. The broader and deeper the adoption, the more profound the shift.
That's a powerful set of tools. Okay, let's put it to the test. Let's take the sector everyone's talking about AI and run it through these 4 signals. The analysis we looked at seems pretty convinced it's a surge.
It does make a strong case.
But I have to push back a little. What about the crazy valuations of a few key players, like, the chip makers? Doesn't that feel a bit like a single stock bubble, maybe riding on top of the wave? How do we square that?
That's a fair challenge. And honestly, there's always some speculative froth in any big technological wave. You'll always have some stocks that get ahead of themselves.
Okay.
But the argument for AI being a broader surge rests on looking at all 4 signals. The underlying evidence suggests the shift is real, physical, and global. AI is being described as a fundamental reconfiguration of the entire digital economy.
Not just a new app.
No, way bigger. Companies aren't just buying the hype. The analysis shows they're actively rebuilding workflows, redefining productivity, and reimagining business models.
Okay, let's walk through the signals for AI. Start with signal 1, cross-sector investment in infrastructure. Is the physical build-out happening?
Oh, absolutely. You just have to look at the data center boom. It's massive, driven purely by the need for AI compute power.
We see headlines constantly.
Right. Things like Blackstone and a Saudi AI firm called Humane doing a $3 billion data center deal. Or reports about Microsoft and OpenAI reaching a valuation, I think it was around $500 billion. These aren't small bets. These are huge long-term infrastructure commitments.
Yeah, that's serious money. And what about the energy needed for all this?
That's maybe even more compelling evidence of a deep shift. You've got Google working with NextEra to potentially revive nuclear power plants, like one in Iowa, specifically for AI data centers.
Wow. Reviving nuclear plants for AI.
And the U.S. government signing an $80 billion pact, aimed at boosting nuclear power, partly to support AI expansion. When you see that level of focus on energy and national infrastructure, you realize this is way beyond just software.
It's becoming a physical reality.
Definitely. And look at the core tech, the chips themselves. Qualcomm's launching new AI chips specifically for data centers, aiming right at NVIDIA and AMD.
So it's not just one winner.
No, it's a full-blown arms race across the entire supply chain. Billions are being invested by multiple huge players. That smells like a surge, not a single stock bubble.
Okay, strong case on infrastructure. What about signals 3 and 4? Revenue acceleration and global adoption. Are we seeing the impact on business models and maybe the workforce?
Yeah, we are. The transformation is spreading across industries. And importantly, new AI-driven business models are starting to generate real revenue now.
Examples.
Well, PayPal just launched specific agentic commerce services, basically AI tools for shopping. They wouldn't do that if they didn't see a clear path to revenue. And in finance, there was news about Sequoia Capital investing in an AI tool designed to automate tasks typically done by junior bankers.
Whoa, replacing banker tasks.
That's a direct, measurable impact on how business gets done, on costs, on efficiency. That's real adoption generating real value, or at least the promise of it driving investment.
And that links to the talent signal too, right? The impact on jobs.
Yeah.
But it seems like a double-edged sword.
It absolutely is, and that's part of why the signal is so complex, but also so revealing.
How so?
On one hand, you have the talent migration aspect. Highly specialized people, top AI researchers, are in huge demand. They're moving into these roles, betting their careers on AI's future. That's the positive side of the talent signal.
Okay.
But on the other hand, the integration of AI is so profound, it's forcing massive restructuring in some areas.
Layoffs.
Yeah. And we have some stark numbers from the analysis. Amazon laying off thousands in corporate roles. I think the figure was around 14,000, even while it invests billions in AI.
Wow.
And Chegg, the education tech company, explicitly blaming the new realities of AI for cutting nearly half its workforce, something like 45%.
That's brutal, but you're saying even that is evidence of a surge.
In a painful way, yes, because it shows AI isn't just talk. It's having a real measurable and sometimes disruptive impact on the actual structure of companies and the labor market. When a technology forces businesses to dismantle parts of their existing workforce like that, it signals a fundamental shift in productivity and capability is underway. It's not just a fluctuating stock price.
Okay, putting it all together then. What's the big picture for you listening right now? It seems the argument is AI isn't just about one or two hot stocks.
Exactly. It's this sprawling global ecosystem. Chip makers, energy suppliers, cloud platforms, data centers, software startups, all interconnected and actively rebuilding parts of the global economy.
So when critics scream overvaluation,
they might be partly right about specific stocks at specific moments, but they might also be missing the bigger picture. What looks like overvaluation could actually be the market struggling to figure out the right price for something genuinely new and transformative. Analysts call this price discovery.
Finding the new equilibrium.
Yeah. It's often messy and volatile, but it's usually a sign of fundamental change, not just froth.
So for investors, for innovators, for anyone trying to understand the future, telling the difference between a bubble and a surge is absolutely crucial.
It really is. One bursts and leaves damage. The other genuinely reshapes the economy, creating entirely new industries and opportunities.
The challenge, then, is looking past the immediate excitement, the headlines, and asking, is this just speculation, or is it signaling something deeper? A real shift in maybe even human progress.
And the evidence we've discussed, those 4 signals, they strongly suggest that for AI, it's leaning much more towards that fundamental shift than just hollow euphoria.
So the next time you see that word bubble trending, maybe pause. Don't just look at the stock ticker. Look for the signals. Cross-sector investment, talent migration, real revenue, global adoption.
Because the future might not be inflating, it might just be accelerating.
The future of artificial intelligence is unfolding, and it's happening at AI World Week, the flagship global event for innovation, collaboration, and transformation. This flagship global AI event is designed to connect visionary leaders, trailblazing entrepreneurs, and influential thinkers to explore the endless possibilities of AI. Experience groundbreaking technology that redefines industries and inspires progress. Join thought-provoking discussions on ethical AI, digital equity, and the transformative role of technology in our world. build meaningful connections that catalyze innovation and drive impact. AI World Week is powered by AI World Society, a global movement dedicated to advancing AI responsibly and ensuring it serves humanity. Together, we're shaping a smarter, more inclusive, and equitable future. Continue your journey beyond the event with the AI World Journal, offering expert insights, in-depth analysis, and the latest trends shaping the AI landscape. This is your opportunity to lead, to innovate, and to transform the world with AI. AI World Week. We invite you to join us and embrace the AI revolution.